Welcome to my regular look at WTI crude oil. It's the first one of 2023 and I've enhanced the analysis further this year, adding in a few new indicators to strengthen the predictive nature of the analysis even further. Now, since the last report, which was early December, it looked like oil was on the downturn, but since then we've had some game playing, unsurprisingly, with the price. We've seen China news bringing a bit more positivity into the price of oil, the demand there increasing, so fundamentals switching around. So where is the price heading next? It could be a very interesting period of time for oil because it's got some either big up or downside moves in it this year, and we're going to find out and have a look where it could be heading next. So with that, let's get on with the analysis. So first of all, into the fundamentals, Baker Hughes rig count. I like to look at the US numbers there and the change from prior count +3, and from last year 174 up. So still pretty bullish, great indicator for gauging the sentiment of the energy, oil sector as a whole. So still remaining pretty bullish there. For those who like to look at US crude oil inventories, those who've been watching this type of video for last year or so know that I like to look for anomalies in the numbers. Yeah, it's more, I think, the game's playing of the industry and can create shocks to the price direction. Now, there has been some over the last month or so, as you can see. Last week, 18.962 million barrels actual versus a forecast of minus 2.243 million, so a big difference there. And then if you roll it back about a month to mid-December, 10.231 versus minus 3.595, and then again a couple of weeks minus 12.58 versus minus 2.758. So forecast versus actual look like it's gone out the window there, and you can see that in the volatility of the price action. And that's what I like to use crude inventories for, and that is pretty difficult to work anything out from the numbers. So keep out an eye out for tomorrow's numbers, 4 o'clock UK time coming out, forecast minus 1.75 million barrels. Right, into the sentiment technical analysis now then, and down the bottom we have seasonality. Now at this time of the year, well, you can see really ramps on up, and that's reflected in the price, and that continues actually all the way through to March, so very bullish there. Now, large commercials, commitment of traders data, probably like to see these doing the inverse of the actual price, but at the moment we've got it the other way around, and the large speculators should be following the price action, and it's not. So we've got a mixed bag there, so I'm calling that a neutral COT assessment. And some other fundamentals, we got the Chinese news, COVID, easing of restrictions, investment, them looking to push on industrial wise, numbers looking a bit better, and like I say, that's a more bullish indicator, and that combined with the seasonality, and like we say, as we saw in the inventory numbers, a bit of games playing has pushed on the numbers up over the last week or so. Now, introducing you to some new analysis. Now, this is called the OVX. It's the oil volatility of WTI, and it's a number produced by CBOE to help the options trading, and a bit like you see in the VIX with the S&P, looking for how that volatility behaves. So what I'm looking for is, if that is down, I'm looking for the WTI price to be moving up, and I've put on this Bollinger Band breakout area here as well, just to help me with the timing of that. And as you can see, we're sitting under that cloud, and that to me is still bullish WTI. And we can also see with this awesome oscillator here, that's its name, it's not just awesome, that's pointing down, also indicating that price should be going up. And another tool that I use is a basket of oil related currencies, seeing how the strength of those currencies perform versus oil, and I expect a strong correlation between the two. And again, like with the OVX, I'm looking for that cloud break up or down. If it's above, in this instance, it's bullish. If it's below, like we saw there and there, I'd be more bearish oil. So at the moment, the currency strength there is bullish. And if we head into the traditional price action, the long term weekly look, CL1 ticker, this is the futures, this is the main symbol, the front month, so we can get, you know, a lot of good price action history here. And what's the takeaways from the chart? Well, we had that, you know, sort of purple, you know, range trend on up, broke out to those highs. That's the Ukraine, start the Ukraine-Russian crisis, then has been pulling back quite heavily since. Some key areas though, Fibonacci is 61.8, which is this $80-81 mark, and this 69.70 area, which as you can see has proved key support resistance type zone. And the interesting shape coming out here is, you can see, I would call it like a heads and shoulders pattern. We've got the shoulder, we've got the head, and is this building a new heads and shoulders sort of completing that pattern? Because if it is, then this, you know, this bottom purple trend line could prove a key area for that price to pull back on down. And then you're looking, you know, 50s and even down to 40s. And if you go over to the volume at price, you can see really it all ranges between early 70s down to sort of mid 40s. So interesting times in the price of oil. You'd almost call it a no man's land situation at the moment. It's got to get on up through that trend line if it wants to go back towards the hundreds. If it fails and bounces back down, and like I said, 50, 40 not out of the question. So that's the sort of longer term look. Let's have a look at some short-term action if you're into finding out reversals in the price. Line break chart here, got a couple of numbers for you. It's a bearish reversal setup, 80 and a half year entry points for a move on downwards. And then finally into the Renko charts, medium and longer term look. We'll start with the medium on the left. We can see the price being trending up nicely. Changed the indicators around for this year, just got the awesome oscillator in here. As we can see, it's turned bullish. We can go up to the chart, we can see how that then helps us get into that trade. We got some what I call the modified Darvas bands, that's the light blue and pink for breakout setups as well. At the moment, as you can see, short term is nicely bullish, trending on up. Targets wise, you're probably looking 82, 83 and maybe up into sort of the 84 mark in the shorter term if that bullishness continues. Downsides, if it pulls back, support at 80 just over, then down into sort of 78, 79 world, and then that 61.8% Fibonacci line just under $78. And in the longer term, well, the trend has been sort of flatter, but you know, it's been bouncing around enough to give you opportunities in that sort of wide range between $70 and $80. The short-term trend, as we know, is up but pretty flat overall. Again, the awesome oscillator here is giving us a bearish correction in there. So, well, and tie that in again, like I say, with this here, which is the stochastics, which is looking overbought at the moment. We could see this as the key area to watch out for, 80, just under 82, because if it fails here, it's down to 79, you know, 76, and then 70. Upsides 85, 88, and then you're looking off into the 90s if it goes over. So that's the technical analysis. Now let's sum it all up and give oil its score. So overall, I'm going for weak bullish based on what we've covered off in the video. Now let's start on the top right here. We've got the other section, that's the other inputs variables that I try and correlate to help, you know, support the Renko and the price chart information. Now generally it looks pretty bullish. We've got seasonality, volatility, currency strength all looking pretty strong, with commitment of traders and inventories looking a bit more neutral. And we got the line break set up there for you for a reversal. Entries 81, 80 and a half. And onto the Renko charts. Medium term, short term, pretty bullish. Longer term, a bit more neutral. And add all that lot up together with the other factors, I'm going for weak bullish at the moment. But the interesting takeaway was that weekly chart we looked at, is that head and shoulders pattern forming, and that purple trend line that we saw, is that going to be the make or break for the up and down side? So in terms of targets, for the upside we got 1.18 and 2.75 to 1, and the downside 0.75 and 1.75 to 1 on a more aggressive entry sort of setup. So overall, weak bullish at the moment for WTI crude oil. Well, we can certainly see some short-term bullish strength spurred on by that China news and activity over there. But to me, that longer-term chart that we looked at, the weekly one, with that purple trend line and the possibility of a head and shoulders pattern building. So, there's not a lot more upside left in it if it's going to be bearish. And then $50, $40 could easily be in the longer term equation. But if it gets through there, then more positivity comes out from the markets, inflation curbs back, China starts pushing, then 100, 110 also not out of the equation, which doesn't help us very much. But in its longer term direction, maybe some options trading plays there, possibility. But in the short term, we definitely know at the moment it's looking a lot more bullish. So with that, love to hear your thoughts on where you think crude oil is heading next, short, medium, long term. Get those comments coming in. And if you want to learn more about the stuff I do, then there's some great playlists for you to get involved with on the channel, from learning how to trade to getting into the analysis and different markets. It's all there for you. So with that, thanks for watching, good luck with the trading, and I'll see you in the next video.